Welcome to this week's episode of Hidden Wealth TV, the show that's dedicated to helping you discover and uncover your hidden wealth. I'm your host, Kristen Oakley, and I'm joined by Chuck Oliver. He is the founder and wealth strategist at Hidden Wealth Solution. Chuck, my friend, I'm excited to be back in the studio with you this week. How are you?
I'm great. Excited to be back.
Well, I know we have another great show for our viewers at home. You are in for a treat, but I wanted to start by just talking about one of the things that really makes you different at Hidden Wealth Solution. And you gave me the stats before. I wrote them down to make sure I would get, because these are big numbers here. You work with over 100 different CPA firms and over 300 tax professionals that partner with you at Hidden Wealth Solutions. So talk a little bit about that and why that makes you so different.
Yeah, I appreciate the question. It's interesting because most people have a tax preparer and not a tax planner. And what's fascinating about that is most of those folks are recording history and they're not taking a proactive approach. So in one of the books that I've written, the Saving Tax Optimization Plan, we talked about there's this distinct difference between those who tell you how much you owe and those who teach you how much less you have to pay.
I like that. Those who teach you how much you owe and those that teach you how much less you have to pay.
That's right.
Wow.
And here's the disconnect. In our profession, and I see this all the time, people say, well, Chuck, I've asked our financial planner of years and years to address this whole tax theme and subject, and it falls on deaf ears because they said, or some will say, well, no, they refer me to the tax professional, and then the tax professional turns right back around and refers them back to the financial professional, and you've got this kind of everybody's pointing at each other, and nobody's getting it done. So what we did is we partnered with a more of a boutique firm out of Michigan, and they did taxes all over the country, and our clients are all over the country, and we can do taxes all over the country, but it really morphed into the ability to now, everybody's tax situation is different. And most of our clients are very strong savers in IRA, 401k. They're facing really large tax obligations. Maybe they're a business owner, high income earner, and they're kind of on what I joke and call the yo-yo plan. You're on your own, right? And they really find, and I think this is a very distinct point that people have kind of said, you know, I never thought about that way. Their tax professional they don't take their taxes serious. So why would they be the source to think that for their client that they're going to take their client's tax situation serious?
Right.
And
meaning
so,
the tax planning
that's
part.
That's right, being the tax planning part. So now
they've got the preparation part down.
Well, yeah. So what? Yeah, they got the prep part. You know, the boxes to check, the dates and the deadlines to file by, but not knowing the little nuances that the tax code was really created. Being a student of the tax code, it was really created for people to pay the legal least amount of tax. And unfortunately, I think the train fell off the tracks, as I like to say in my books, because people assume, well, they're the tax professional, they must know how to save me tax. And at the end of the day, they probably pay less tax than most of our clients, and they don't really put an emphasis on the importance of saving tax. So for them, it's more of manufacturing, almost like an assembly line of taxes, as opposed to really sitting down and getting a really good, solid tax plan.
Well, and I love this. You've said this before, this analogy that a CPA, a tax preparer, which obviously we need those in our lives, but they're more the archaeologist versus a tax planner is the architect who's helping you plan ahead for those situations.
That's right. Can prepare, prevent, and protect, as I like to say in my books, right? Prepare, prevent, and protect. And that's where, unfortunately, a lot of people miss it, especially with all these proposed tax changes. We talked a little bit in prior shows. And there's a litany of them, and many people don't even realize the impact. They hear bits and pieces, but having an actual strategic tax team to be able to take and help them understand their own particular tax situation to that really has made a really big difference. And most clients really kind of want the synchronicity between the tax professional and the financial professional, because one of the jokes I've said is, I would bet dollars to donuts that most people's tax professional doesn't even know their financial professional or vice versa. And had they known each other, the plan probably would look very different.
They could be on the same page and really develop that cohesive
we say singing from the same hymnal or rowing in the same direction.
Right, exactly. Well, I love the title of today's show that you have titled it. It is called How to Remove Your Wealth from Washington. Who would like to know how to do that? So let's start with that. That is the whole premise of what we're going to be talking about today.
Well, Washington is on a spending binge, right? And there's no spending, there's no stone left unturned.
There's no end in sight, unfortunately.
Yeah, unfortunately. And so what's happening is, you know, when you create trillions of dollars of spending, you also have to create trillions of dollars of taxes, right? And what a lot of people don't realize, and this is fascinating, this comes from the Congressional Budget Office, is that it's projected over the next 10 years there'll be $7 trillion of deficit spending. And it was pre-planned to be about 3 trillion, which was already bad enough.
Sure.
The fact that we're going to now more than basically 2.5 times it is concerning. And that again is coming from Congress, who has a way of obviously exaggerating sometimes too low or exaggerating too high. The other thing that that's going to do, unfortunately, is add about 19 trillion to our national deficit over the next 10 years.
Oh my gosh, it's already so astronomically high.
Well, and here's why Washington's after our wealth. At the end of the day, and this is fascinating, there will be more 65-year-olds in about the next decade than there are 18-year-olds. And that's never happened in our country before.
Yes.
So as a result of that, you've got more people in the wagon, right, than are pulling the wagon. And we know this with the deficits that we're seeing and the concerns of Social Security,
Yep.
Medicare. You know, everybody loved getting the Social Security raise, but our clients are like, but yeah, but then they increase the Medicare tax,
Yep.
right? So I think of one of the proposals from Senator Wyden out of Oregon, right, a growth tax. So this is just a tax from the standpoint of, you know, your account was at one value at the beginning of the year, it finishes at the end of the year slightly higher. It doesn't matter if the following year you end up losing it, like 2022 obviously put things in perspective, but for that year, because you registered a growth in your account, there's a proposed tax.
And that is happening right now in Washington as a
It's being seriously discussed, like it was at least left out. And unfortunately, a lot of these things were brought into the Biden administration's Build Back Better bill. Some crazy stuff that I'm sure we'll get into on the program, but growth tax, transaction tax, the removal of the step up in basis tax, right? And this is where a lot of you listening at home, if you've got capital gain exposure, you know, this is something you're going to want to take very seriously, because what's happening is it's called a transfer of basis. So let's say you bought a stock or a piece of property for whatever, 100,000. And when you pass away, it's now worth $1 million. Well, at death, you would get a step up in value.
Right.
Now it's proposed to be a transfer of original value. And so that's going to obviously expose people to serious, significant capital gain taxes. I think of higher tax to Social Security, as if that wasn't high enough already, going to 85% of it being taxed.
Right.
And there's just a litany of other taxes, unfortunately, that are being proposed, and they're being proposed and considered very seriously.
I mean, I'm so grateful that you were out there talking about these, because I think this is a lot of stuff that people, it's hard to know what to trust in the news of what's going on, but you're able to synthesize down and say, okay, these are some very real things that are on the table, and you need to be prepared in order to navigate them.
And a key thing, you know, when you can synchronize and strategize, especially having a think tank, one of the coolest things about our tax team, right, is it's kind of like the old Ask Jeeves. We can take a very complex or maybe an unknown tax topic and run it right through our strategic tax team, and we have somebody that has the knowledge, the background, the connections to Washington to understand what those are. And I think a lot of people are going to be, unfortunately, a little bit in shock and awe that when if you don't remove your wealth from Washington, Washington's going to remove your wealth from you.
And we don't want that to happen for you at all. So I know we're going to have to go to commercial break, but as part of your offer, I know you offer your personal wealth blueprint to folks who call into the show, but you also offer a saving tax optimization plan analysis. So would you mind sharing a little bit more about that?
Love to. The STOP, that's the acronym STOP, Saving Tax Optimization Plan, came from myself and the original partner of our tax team. And we said, you know what, how do you help people stop overpaying taxes? And so that STOP analysis basically shows them the retirement tax risk road they're traveling, right? We've talked about that topic before.
Yes.
And now it shows not only the pitfalls, but where there can be some reroutes, some redirection, right? If everybody just believes Google Maps, good luck, because I know somebody drove right into
water,
a lake,
yes,
or what have you.
As well. Yes.
So you want to make sure it's a human, and you want to make sure it's obviously somebody that knows what they're doing. And that saving tax optimization plan really helps people discover and uncover and open their eyes to, wow, I didn't think about this cause and effect decision about when to file for Social Security or when to do my Roth conversions or what my required distributions might be when the government starts forcing me out of my money.
Absolutely. Well, I know people are probably chomping at the bit to pick up the phone and make this important phone call. So we are going to take a quick commercial break, but we encourage you, if you would like to meet with Chuck and the team of Hidden Wealth Solution for your own complimentary personal wealth blueprint, and as part of that, you'll get your own STOP plan as well. All you have to do is pick up the phone, call that number on the bottom of your screen, 844-837-3652. You're also welcome to take out your smartphone and you can scan that QR code in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few simple questions, and then a member of the team will reach out to you to set up your complimentary meeting that way as well. We have a lot more to cover today on our episode of how to keep and remove your wealth from Washington, so stay with us. We'll be back right after this.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to Hidden Wealth TV. I'm your host, Kristen Oakley, and I'm here with Chuck Oliver. He is the founder and wealth strategist at Hidden Wealth Solution. We are talking today about how to remove your wealth from Washington so that they don't remove it from you. Gosh, such an important subject. And I know that you've already presenced this a little bit, but I don't think that we can hit this point hard enough that there are so many proposed tax rules that are on the table right now. And so what are some of these other proposed rules that retirement savers need to be aware of?
Yeah, as we talked about, the advantage we have is actually having a strategic tax team. So folks that are connected to Washington understand what's being talked about, discussed, and likely proposed. And I think of some of them, for example, that just kind of catch up to people, right? One is your tax bracket changes. And some of this is, no fault of your own, right? You lose a spouse and you go from a joint filer to a single filer.
Yep. And that means a big increase.
Yeah, huge increase. We've seen increases from jumping people from 24% in a joint bracket all the way to a 32% single bracket.
Wow.
The big dilemma we have now is the RMD dilemma, the required minimum distribution dilemma, and where these inherited required minimum distributions come in, you can't Roth convert an inherited IRA.
Right.
And I think Washington's well aware of that. I think that's part of those of us trying to dodge the title of being the perfect taxpayer, is that the people that left us those IRAs didn't learn the lessons, although obviously with the greatest of intentions. And so in their mind, they're obviously just doing what they can do to obviously pay it forward.
Sure.
Unfortunately, that pays taxes forward.
Yep.
And you can't Roth convert those. So sometimes your tax bracket's going to change on you. Sometimes you change on the bracket. Sometimes the bracket changes you. We think of the Tax Cut and Jobs Act, and we think of, there were a lot of deductions taken away and there were a lot of deductions added. But a lot of people are not realizing those rules are going to sunset. One of the biggest is the next one being the elimination of deductions.
Yes.
So the standard deduction basically doubled for everybody.
Right.
That's going to get cut back in half, and all the brackets are going to jump up about 3% if you're just in the same tax bracket or in the same joint filer versus single. And then determining the changes or understanding what the changes are to assets, right? So like we talked about, Social Security was promised to never be taxed. Now they've decided to tax it. Now you're hearing rumors, which this was a big part of the kind of the whole political push, that nobody's taxes are going to go up unless your income's over $400,000. Well, that's not the case. When the Tax Cut and Jobs Act sunsets, everybody's taxes are going to go up.
Yeah, and just to put the timing on this is set to happen at the end of 2025, which is not that much,
No.
It's scary. Time is flying.
And you look at where taxes are on sale. I mean, this is arguably the lowest taxes have been basically for anybody that's kind of in the baby boomer or silent generation.
Right.
And unfortunately, and I think about this statistic, and it's pretty massive, the silent generation of the parents of the boomers, right?
Yes.
And it's projected now between now and 2045, there'll be $84.4 trillion that will go from those generations to the next generation, and they're not prepared for it.
No, and I've heard this is known as the Great Wealth Transfer, and there's two things going on here, right? It's knowing how to do that strategically, but also this generation's about to inherit a lot of wealth that they are not going to have a clue what to do with.
Well, then the last one is proposed changes. And those changes, which we have our ear to the grindstone because of our strategic tax team and the relationship we have with Washington, is the situation that one is an unlimited age required distribution. So if you've done too well in saving, you're going to be penalized, right? And we think about it, originally, Congress was rewarding us to be financially successful.
Right. We were told this was a really good thing, right?
Great thing, right?
The burden of retirement was placed on us. We're going to do away with pensions, but now you have 401ks, you have IRAs, and this is a good thing.
Well, and when you think about it, the top tax rate at that time was 70%. So you would think, surely to goodness, I'm going to end up retiring in a lower tax bracket. People are not realizing that today.
Yeah.
The other proposal was removing the ability to do a Roth conversion, which once was the case prior to 2010, that if your income's too high, now they're trying to means test it, where if your savings accounts are too high, not only can you not continue to contribute, you can't even convert. That's going to pose a big problem. But people do have that. Folks, if you're listening, there's a window of opportunity. I know most people, when they find a sale, really want to take advantage of the sale. The fact that this may be the greatest savings as opposed to saving 20 or 30% at Walmart or Kohl's, this is a big retirement savings. And you can really take advantage of that by having what we call our personal wealth blueprint with a saving tax optimization plan. Learning the retirement tax risk road you're traveling is what obviously gives you the insight to know, hey, what can I do by becoming obviously knowledgeable about what I'm exposed to?
For sure. So when someone calls that number today to take advantage of this opportunity to get their own saving tax optimization plan, to get their own personal wealth blueprint, what is that process going to be like once they get connected with you?
One of the first things we asked them to do is actually we created a calculator, retirement tax calculator, not a real original name, but it really keeps it simple, right? It keeps it simple for people. So by going there, it's going to point out a couple key things. It's going to point out what you're facing as it relates to you being a strong saver, because this is ideally for those that have been strong savers in IRAs and 401ks or 403bs, money they've not been what I call the tax me later accounts.
Right.
That's going to show what the requirement of distributions and that kind of cumulative tax liability is going to be, but it's also going to show the reinvested RMD tax liability and the inherited tax to your children and grandchildren tax liability. That puts us on a road of then understanding, wow, this is what you're exposed to. So now by seeing that like a roadmap to tax, we can now work backwards and then show them that, okay, this is how much you should Roth convert. This is when you should maybe elect your Social Security if you've not already made that distinction. All those things have a cause and effect, and by having a plan and knowing what you're exposed to, just helps you navigate a better plan.
For sure, and it helps you be able to help them create greater tax efficiency throughout your financial plan. So again, that's retirementtaxcalculator.com, correct?
Yes.
Wonderful. Well, Chuck, I know we're going to take a quick commercial break here, but when we come back, we're going to cover some more solutions to help you navigate how to remove your wealth from Washington. But we encourage you, this is a great opportunity for you to pick up the phone, make this important phone call, do something that your future self is going to thank you for. Simply dial 844-837-3652, or you can scan that QR code and that will get you connected with Chuck and the team at Hidden Wealth Solution for your own complimentary personal wealth blueprint. And as part of that, you're going to be able to get your own tax analysis done as well. More on Hidden Wealth TV right after this.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place and then help determine if you're well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision, so why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you're getting the most out of your retirement income plan.
Welcome back to Hidden Wealth TV. I'm Kristen Oakley here with Chuck Oliver. He is the founder and wealth strategist at Hidden Wealth Solution. And Chuck, my goodness, this is such a valuable show we are having today. We're talking about how to remove your wealth from Washington. So I know we only have a few minutes left in today's show, but there's so much more to talk about.
Never enough time, is there?
No, for sure not. So where would you like to go from here in terms of, we've talked about some of the proposed potential tax changes that are coming and how folks can be prepared for that. What are some solutions that you're able to enact for people, especially given that taxes are on sale right now?
Sure. We talked before, right? The QCD, right? Qualified charitable distribution. If you want to really get your IRAs out of the crosshairs of the IRS, right? And kind of eliminate, ideally, or at least reduce these required minimum distribution exposure, this exposure to RMDs. That's one, right? There's some rules and regulations to that. So for time's sake, I'll keep moving. The other one, which is really big, is the energy deductions that are out there. We just find people either aren't familiar with or they've never fully understood them to take advantage of them. And that's providing people the ability to move money from IRA to Roth IRA and using a little known deduction that's been around since the inception of our tax code to create a major first year deduction. In fact, our tax team that we talked about earlier in the program would argue to say that's the greatest tax deduction in the entire tax code. So people will use that so that they're not fearful of moving money out of the tax system into the tax-free system because they don't know what their liability is going to be. Well, in this case, the liability is zero if they do it right.
Right, right. So talk to me about the ideal kind of person that, you know, who calls in, who either calls in from the television show, the radio show, and they come to you. Where are they usually starting from in this process, and what are the steps that you take to help them figure out how to remove their wealth from Washington?
Sure. First thing is helping people become aware of what they've never been made aware of, right? Understanding the exposure that they have to tax. I say it all the time, right? Teach them the tax risk road that they're traveling. And by doing that, now they have a better, I guess, appreciation, if you will. Not that we've met anybody that actually likes taxes.
Right.
And we're not saying that people, you know, just completely do things that are outside the scope of the tax system. These are all things in the tax system.
Right, we're not talking about tax evasion. What we're doing is using the tax code to your advantage to engage in tax elimination.
Exactly, yeah. Somebody said, what's the difference between tax, you know, tax evasion and tax mitigation?
One is
about 20
legal.
years.
Right. Yeah.
So we're doing the tax evade, you know, we're not trying to evade taxes, we're trying to strategically navigate and eliminate taxes.
Right.
And these are all strategies that people can do. And one of the first things is by seeing the exposure that they have. Once they understand the exposure they have, now they have a greater appreciation of being more motivated to want to learn the things that they can do. And I think they're less concerned or fearful of, well, you know, thinking outside the box.
Yes, right.
And most people don't think outside the box, but there's always been this whole other set of instructions on the outside the box. So if you don't get outside the box, you're not going to see the other set of instructions. And that's what we find in the tax world. Most people are trapped in this idea that taxes are the boogeyman. And the reality is the tax code was created for people to pay the least amount of tax. So the first thing we look at is a saving tax optimization plan analysis, hence the acronym STOP, right? Teaching people how to stop overpaying taxes.
Right.
And a lot of that can be with the retirement tax calculator, right? To just see that exposure, which we've talked earlier in the program. And then we walk them through the cause and effect of what first, what second, and what third. Because it's all about not just the strategies, but the order of the strategies is what enables somebody to optimize, right, the least amount of tax exposure that they can take advantage of.
So hearing about ordering, I'm sure that comes with figuring out how to withdraw their money in what order, right? Because that's where people can really get into trouble.
Yeah, yeah. In fact, sadly, our clients, 95% of them have 95% of their money trapped in these ticking tax time bombs, as we know, as IRAs that were probably their former 401ks or 403bs or whatever they were.
Right.
And so they're hesitant. And the sad part is, the reality is, you know, if you want $60,000, you're going to have to withdraw $80,000 if you're in a 25% tax bracket.
Right.
And people don't realize that, wow, if I tug that much on the pre-tax to get to my net of tax, you're putting a lot of pressure. And that's the thing with like an RMD. It doesn't show any favoritism or give any leeway. You know, when I think of clients like last year, the first year in retirement, market dropped 25%. They took, you know, they had to take their first RMD.
Right.
That moved their $500,000 down to almost $350,000.
Yes.
RMDs cause more taxes, and if people can learn how to eliminate them, they can become either a low tax or a no tax retiree.
Right, and that's the goal, is to look poor on paper to the IRS, right?
That's right. You don't want to be the perfect taxpayer.
No, for sure. We want to mitigate, we want to help you eliminate those taxes. Well, you know, it's interesting, Chuck, 'cause we started off the show today talking a little bit about what makes you different at Hidden Wealth Solution, and that you have this extensive team that you're able to work with who are specialists in this area. One of the common things I know that I have found working as a financial educator in this industry is that a lot of the bigger firms out there, we call them, you know, you and I have called them the big box, right? Big box store brokers. They're actually, they're told that they cannot engage in strategic tax planning. So you have all these people who have been accumulating massive amounts of money in their different accounts, IRAs, 401ks, 403bs, whatever you might have there, and they're working with an accumulation firm that can't even engage in that strategic tax planning with you. And that's the problem. And yet that is what makes you so different.
That's the significant difference. When people start to make that transition from accumulation phase to distribution phase, I tell them it's kind of the football game of finance. You know, if you're down 2 touchdowns at halftime, if you're going to take the same game plan out in the second half as you used in the first half, it's not going to bode well for you.
It's not.
And that's a big difference. And that's what clients will say. You know, Chuck, what we really like about the Hidden Wealth solution is we've got the ability, you guys have the ability to make things very concise, simple, easy to understand, but synchronized. And you know, when you think about it, most people don't know, the attorney doesn't know the CPA doesn't know the financial planner. None of these people are even on the same page. But if you can get people on the same page, which we had to go out and basically bring that into our firm.
Yeah, you built a team that could be on the same page.
CFAs, CFPs, CPAs. I mean, we've got all the C's covered.
Yes.
And these are people that even have connections to Washington to understand what these proposed changes are and how soon they may be enacted. And by having that proactive approach, right, to taxes, that's the key. Most people are very reactive, like we said before. Most people have this feeling that the tax professional is going to teach them how to save tax. They only file their taxes. And most of the time they don't know the strategies. And I know this. I used to be a CPE approved instructor in a couple different states. We would intentionally teach CPAs, tax attorneys and tax professionals alike, and they would say, wow, these are things we didn't even know. And it's like, well, look, it's in that 1,000 change booklet that comes out every January. You just have to be a student of that. And a lot of people don't, unfortunately, if they're not dealing with that, it's not on their radar.
Right. Well, and what I love is what you're telling people is, listen, you don't have to be an expert in any of this stuff. You just get to be an expert in you. And then coming to work with you and the team at Hidden Wealth Solution, you're able to really figure out what is the right strategy to employ to help them remove their wealth from Washington.
And it starts with taxes, right? If we don't get the taxes right, as I say to people repeatedly, everything else is going to be inferior. And I'm talking about the tax on your Social Security. I think of clients that we showed them saving almost $250,000 over their lifetime of just Social Security tax.
Wow.
Just tax on their Social Security. Now think about that. Not passing on. In fact, I'll give you a really pretty staggering statistic. Whatever you have, especially let's say you're in your maybe late 50s, early 60s, maybe even mid 60s today. Whatever you have in your total IRA, not yet taxed, or what I call the tax me later accounts, the tax will be anywhere from 1 to 5 times more of the tax than what your balance is today, depending on your age and depending on your growth rate. And so we have a calculator that will show this, and people don't realize the impact of that. But once they do, they know how to save.
Well, for sure. So one last time before we close today's show, why don't you tell folks what's going to happen when they call the number today?
Yeah, look, if you're really serious about figuring out a way to kind of remove your wealth from Washington, in particular, right, how to reduce your taxes and be a low tax or no tax retiree, we'll teach you, right? This tax savings blueprint and the personal wealth blueprint all starts with retirementtaxcalculator.com, and we'd love to have the opportunity for those of you who've been strong savers, high income, that want to learn how to save.
Wonderful. Chuck, thank you so much. Thank you so much for watching. We look forward to being back with you on next episode of Hidden Wealth TV. We'll see you next time.